Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll start off by talking about the S&P 500, which has it finally broken its uptrend, because it did hit a bit of a rocky patch last week?
Yes, that's right. Look, last week when we were here, we spoke about the S&P 500, and we spoke about this upward trend that it held. You can see that uptrend, which I've been calling it the Trump trend, because it started on the 8th of November last year when Donald Trump won the US election. And you can see that market's been trending ever higher since then. It did pull back last week and reversed up off of that rising trend line. So we said last week that whilst that was the case, one would have to probably remain bullish on the S&P 500. But what has happened subsequently, as you can see, is that upward trend has been broken to the downside now. We saw a big down day last week where everyone was going on about the fact that the S&P had its first 1% down day in like 109 days or something. It was a long period of time where the S&P 500 hadn't had a day where it was down 1% or more. And last week we saw that, and it's drifted a little bit lower. You can see last night it tested the 50-day moving average, and it reversed up off there. But let's see. I mean, there is some technical damage that's been done here. The break of that rising trend is definitely significant, and it's worth noting. And at the lower ends now, where do we find support? Well, the first major support here is at 2300, which is those previous highs that we saw in January and February over there. And then below that, there's quite a strong band of support at about 2275, 2280, that sort of area there. So I won't be too surprised if we do head down towards those levels at some point. And I do kind of get the feeling that maybe this S&P 500 rally has now finally given way, in the sense that all the bullishness around Donald Trump that was driving this market, all the expectations of what he was going to do, it has kind of been scuppered a little bit in the last week with the fact that he lost the vote to repeal Obamacare. And the markets are now asking the question, is it possible that if he couldn't get away with that, then what kind of opposition is he going to have against tax cuts? What kind of opposition is he going to have against infrastructure spend? And basically, is this big rally that we've seen from the 8th of November last year, where the market has basically rallied 300 points off that low, which is about a 15% rally for the S&P 500, are we now due to give back some of those gains? And technically, it certainly looks as if we've begun the process of giving back some of those gains now.
I mean, if you had to go to the 200-day moving average, which is the red line on the screen there, yes, obviously that would be great for you because you've got this option structure against such a pullback. But I mean, what in percentage terms, how far is that from where we are here?
Well, the 200-day moving average is 2209, and we're at 2341. So what is that, about 130 points to the downside, which is, my maths quickly, it's about 5 or 6%.
Okay,
I think.
So it's on the spot there.
Yeah, no, it's a fairly meaningful pullback from the current level. Look, the payoff of our options profile is on the right-hand side of the screen over here, and you can see below 2350 we start making money on our options. Our best sweet spot area is below 2280 and above 2180. So into that area there we would make $1,260. That would be a best case scenario for us. And this structure expires on the 21st of April, so we've got about 3.5 weeks to go. So it's possible that we might end in the money with this thing. Yeah. I'm relatively confident about it. But if I'm wrong and we don't see the market closing in that area, you know, the worst that can happen is we lose $140, which is our options premium. So it's not the end of the world. And if that were to be the case, chances are I might put on another one of these structures for the May or the June quarter.
Yeah. Interestingly enough, if we look at our own market, the top 40, you feel that actually things are looking quite good for a bullish setup.
Well, the reason I say that is purely because of the factors driving the rand and the political risks in the market at the moment. We're going to look at a chart of the rand-dollar exchange rate in a moment. But quickly, while we've got the chart of the top 40 up on the screen over here, building on what we discussed last week. Last week on the show, we pointed out that the market had begun to break up above the top of this channel, which has been in place since January. And that is technically a bullish break. And you can see that since then, the market has come back. It's retested the top of that downward sloping channel, which theoretically is support on a pullback. And then it just so happens that yesterday we got the news that Zuma has decided to recall Pravin Gordhan back from a trip to the US and the UK, and markets got all jittery about that. We saw the rand weakening sharply yesterday, and it's weakened further today. And that serves to push the market higher. Remember that our top 40 index is very, very sensitive to the rand. About 70-odd% of the earnings on the top 40 are now coming from offshore. So that means that the rand and a weaker rand has a very, very positive underpin for our top 40 index. And it might confuse people to sometimes see, well, we've got all this chaos going on politically. Surely, you would expect the stock market's going to be down on that. But absolutely not the case. Because of the fact that the rand weakens, it actually serves to push up those rand-sensitive stocks in our top 40 index. And hence why you saw a very big reversal to the upside yesterday morning. And again today, the market's up nearly 500 points as we sit here because the rand is weaker. So yes, it does look fairly bullish. And technically, the fact that we've broken that downward channel is encouraging. And it looks to me like the next technical level that we could see is possibly 45,500. Which is that dotted line over there. And if that were to be broken to the upside, then you can't rule out the possibility that we go back to 47,000. But let's just see. I mean, the situation is very, very fluid at the moment. The market's being driven by a lot of uncertainty and a bit of panic almost, as we can see in the value of the rand at the moment. And we don't know what Jacob Zuma is going to do with Pravin Gordhan. Maybe by the time this show gets aired tonight, we will know. But as we sit here right now, we don't know what. We're still all sitting here sort of waiting and wondering.
We can only assume that maybe the Guptas were short the rand for feeling really uncomfortable, and also, but hey ho, they're feeling less uncomfortable today, I imagine. Garth, so if we look at the rand-dollar exchange rate, I mean, last week I was sitting here, well, on Monday evening, talking with Stephen Greenstein from Investec about how we were on this sort of winning streak for the rand. We were looking at breaking 1250. In fact, I think we did actually break 1250 at one point. And there were sort of targets then set up on that run. Do you think that's now reversed?
It has for the time being. You're right, we got below 1250. In fact, yesterday morning, just before all of this news around Pravin Gordhan broke, the rand was trading just below 12.30 rand to the dollar. So it was very, very strong yesterday morning. I couldn't believe it. Remarkably strong. And then, of course, we got this news, and we've seen the rand trading up through 13 rand to the dollar today. So it's had a very bad 2 days on the back of this news of the possibility of maybe a cabinet reshuffle or we don't know what. But anyway, the markets don't like that kind of uncertainty, and hence you can see foreigners have been selling the rand quite aggressively. Now, if we just look at it from a technical standpoint, you can see the chart of the rand-dollar exchange rate here. That break below 13 rand 20 in February, that was a very bullish break for the rand, and we did at that stage call the rand to go stronger. And it's gone stronger, as you can see. It's been particularly strong into March now. But over the last day, we've seen this massive reversal, as you can see in yesterday's candlestick pattern over there. Now, from a level to watch perspective, 13 rand 20 is going to be a very big level. That's all of that previous lateral support over there, which you can see all those previous lows that came in at 13 rand 20. And now we've also got this downtrend, which joins all the highs since November last year. And that also comes in at about 13 rand 20. And you've got the 50-day moving average in that kind of area as well. So I think 13.20 is going to be a very big level. Let's see. I won't be surprised if the rand goes and touches 13.20. Whether it actually breaks through that level or not, I don't know. But if it does start to break up above 13 rand 20, then that would be technically a bearish break for the rand-dollar exchange rate.
Yeah. Okay, Garth. So moving on from the bigger picture to a couple of the recent trades for the portfolio. You're not doing any new trades for the portfolio today. GlaxoSmithKline, how's that working out?
Yeah, it's been a bit frustrating over the past week. So here you can see the chart of GlaxoSmithKline up on the screen. Keep in mind, we did this trade on our offshore account where we've got money in London where we're trading with £10,000, and that affords us the ability to trade the offshore markets. Now, what I'd identified last week was an ascending triangle pattern, which I thought looked poised to break to the upside. I did indicate that I was a little bit naughty in the sense that I bought in anticipation of a breakout through this overhead resistance level, which is at about £16.90. And a breakthrough there would be a bullish break for Glaxo. But it hasn't gone through there. It's actually been drifting a little bit lower, and it has flirted with our stop loss level at £16.65 a couple of times over the last few days. So I'm monitoring it very, very carefully. As I look at this, I still think there is a potential move that's going to push it out through £16.90. We haven't seen a meaningful pullback, and there's definitely buying interest at the lower levels here, as we can see from the long tails to the downside on those daily candlestick patterns that I'm pointing out there now. So for the moment, I'm going to sit tight with this trade and keep it on. But if we do start to move back below £16.65 on any more sort of sustainable basis, then I will probably cut this trade. But for now, I'm hanging tight and hoping that we do see the price gradually nudging up and eventually pushing out through that overhead resistance zone at £16.90 over there.
Yeah, possibly the more interesting trade that you're in is actually Naspers, and that was, I think you entered into that last week. It was one of the first trades in the local portfolio that you've done for a while.
Yeah.
And I must say, last week it was after Tencent's results came out. They were fantastic, but they were lighter than market expectations, and the shares came off, and Naspers didn't have a great day as a result. And I thought, oh no, here we go. But it has subsequently rebounded.
Yeah, it has. It helped in large part by the weaker rand, actually, over the last 2 days. But here's the chart of Naspers, and you're right that it did come back quite sharply after the Tencent results. But if you look at it just purely from a technical standpoint, what we had identified was that the share price had been stuck in the sideways channel, and that it was basically between 2,100 and 2,200 rand. And that's capped the trading action for most of this year, in fact. And at the time, I looked at the graph of Tencent versus Naspers, and I said it looked as if Naspers definitely needed to play a bit of catch-up in the short term, and that was one of the reasons why we bought Naspers. So we went in at 2,165 rand, and with a stop loss at 2,100, the stop loss would have meant that the price would have had to break to the bottom end of that trading range, which I felt was a low probability outcome. What I figured was a higher probability likelihood was that the price would break out through the upper end of that trading range and then push on to higher levels. And that has happened. So we got the breakout. Then the Tencent numbers came out, and the price did come back, as you say. But actually, from a technical perspective, all that meant was that it was coming back and retesting the top of the breakout. It didn't really go below 2,200 rand. So effectively, all it was doing is breaking out, coming back, retesting the support, and now it looks like it's getting going again. Yeah. As we sit here right now, when I checked my phone before we started recording, the share was trading at 2,303 rand. So it's looking good. I said when we did the trade that my initial target was 2,300 rand, but I actually think that is too conservative of a target. Yeah. And I'm inclined to want to run this trade a bit more, and let's see if we can get more out of it. Because really, if I take the height of that trading range, it should probably project up to about 2,350, maybe even 2,400 rand as a short-term target, and beyond that, possibly even higher. So I'm inclined to sit tight here rather than banking the profit too quickly. The setup looks good. I'm comfortable with it. It's holding support. Let's give the trade a chance to work out.
Yeah, okay. Guys, in that case, what do the portfolios, how do they stack up?
So here's our local portfolio in rand. We've got the recent trade in Naspers that we've just discussed, where we are making a mark-to-market profit of 3,630 rand there. So overall, our portfolio in rand is up 2.5% for the year to date. Still battling to really get going, but at least we are on the right side of the ledger there. And then this is our offshore portfolio, which is denominated in pounds. The two trades that we have open there right now is our option structure on the S&P 500. There we've paid away a premium of $140, but it's looking possibly good for us still. We've got 3 weeks to go, so let's see. And then the GlaxoSmithKline trade is a small loss of £75 there at the moment. So our portfolio in London is down 1.14%. It's not the end of the world, and I'm comfortable with those two trades that we've got on there for the moment.
Yeah, and let's hope that the market likes the Tencent Tesla news. That was the big news today.
Yes.
So I don't know if that's why Naspers was rallying, but hopefully it builds on that.
I think today was also largely driven by a weaker rand. That's also helping Naspers to move higher.
Yeah. Guys, now you've started a couple of courses, so you've had a bit of a hiatus. Tell us about the upcoming courses.
Yeah, I've set 2 course dates for May of this year, so my second quarter series of courses. High probability trading course in Johannesburg on the 13th of May and in Cape Town on the 27th of May. So anyone that's interested in attending either of those courses can please email me, garth@traderscorner.co.za, and I'll email you all the details.
And then just lastly, a reminder that you can get a weekly reminder.
Yes, you can. If you go to traderscorner.co.za, you can go to the middle of the page and you'll see a link there which talks about a free weekly email. Sign up, it's quick and simple, and every Tuesday at lunchtime we'll send you an email detailing what is coming up on the show for that week. So you get a little bit of a heads up in terms of what we're going to be trading for each week.
Great. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.